It's time for another 2-week update for Southern California real estate. We're going to cover Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura counties. We're going to go through single family and multifamily numbers. There's an inventory problem we're going to discuss, and it's not just low inventory. And then stick around to the end because we're going to talk about headwinds to the supply and demand in the real estate market. Hey there. Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers and tenants and landlords make the best decisions during these crazy days in Southern California and beyond. You're getting the data before anywhere else. You don't have to wait 2 months like Case-Shiller Index. You don't have to wait a month or two to read about these headlines in the newspaper. You're getting it pulled straight from the multiple listing service as soon as we can. And we're here with a big update. The market is shifting. There's some changes we're going to show you in the data. So if you're ready to dive into Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura County numbers, hit that like button. And let's get started. Let's dive into the Southern California real estate market update. We will start with Orange County like we always do. And we're going to show you the number of properties that have closed. We're going to show you the number of properties that have gone under contract. And we're going to show you the number of new listings. And we're doing this all for the first 2 weeks of February. Now, normally we go to about the 15th of each month, but obviously February is a shorter month. So we went from the 1st through Valentine's Day. Hope you had a great Valentine's Day. So diving into Orange County, the first thing you're going to notice is that our pending sales are down as compared to 2021 and even below 2020. So pending sales are down. But what I'm blaming this on, and I did this for January as well, and I'll continue to do this until things start to change in the market, and that is the reason the number of properties under contract is lower is because we don't have enough inventory. And I've done plenty of other videos showing how low inventory is. And you can see it here, the number of new listings that we have coming into February, just as we're getting started into the spring buying season, is at an absolute record low. So while pending sales may not be record high, when we have record low new listings and still a solid number of pending sales like this, when these two numbers are that close together, that means it's bidding war time. Now, what's interesting is I'm out there with buyers right now. We're writing offers, and we've been doing it through January into February, and we are seeing multiple offers, but not as crazy as times past. Now, of course, this is anecdotal. This is just a few of my clients, but we're not seeing 20 offers. We're seeing maybe 8 to 10, or maybe even offers don't come in immediately, and it's Monday or Tuesday, and they only have 5 or 6. So again, anecdotal. This may be a shift in the market as values have gone crazy. It's getting more and more expensive, and rates have gone crazy. So we're seeing that as well is going to reduce buyer demand potentially, and it's going to price some buyers out of the market as well. So it'll be interesting what happens on the demand side. With supply this low, even if demand does drop, it still may not be that obvious in the marketplace. And moving on to Los Angeles, we can see here, traditionally LA, when I do these reports, the numbers have been kind of moving in these 3 straight lines, but LA is at absolute record low inventory. And you can see the pending sales are pretty high, not as high as 2021 at this point in time. So this is looking like a slower start to the buying season for pending sales. But again, it's because of a lack of inventory. There's much less to choose from, and we've got record low inventory. So Los Angeles, this is about as close as we've seen these lines. So this is very much a seller's market, very much a multiple offer market when you have such low inventory. One more point to add in here for Los Angeles is Los Angeles County and City are still under eviction moratorium. While it has expired for the rest of Southern California, it's still in place for Los Angeles. This makes it difficult for landlords to sell their properties. The LA eviction moratorium prevents landlords from removing tenants because they want to sell, and that is making it difficult for landlords who need to sell. Right now, you'll see, and we're going to go into foreclosure numbers in the next video, but you're going to see an increase in foreclosures in Los Angeles, and it's partially attributed to the Los Angeles eviction moratorium. There are many landlords who have not been able to receive any rental assistance or maybe not enough rental assistance, and it runs the gamut. Their tenants won't cooperate, the tenants don't qualify for rental assistance. These landlords are starting to lose their properties, and the eviction moratorium is going to run through 2022 into 2023. So this is going to change the numbers in Los Angeles for foreclosures and the amount of listings as this continues. We've done a video on the LA County eviction moratorium. We'll link it above so you can take a look at that. And the other downside of inventory is the fact that this inventory coming to the market isn't stuff that's going to sell. There are several listings hitting right now in these record low numbers that are just priced at crazy numbers. They're not real sellers. It's not real inventory. So for example, in Riverside, we may see 1,488 new listings in the first 2 weeks of February. What is also in there are a bunch of listings that are priced too high, and sellers aren't going to take any less than that. So it's not real inventory. So this isn't even giving us a full reflection of what the market's like out there. It's actually even tougher for buyers because you're not going to take a run at a property that's priced at a ridiculous number. So this is, you got your closeness between the lines, between the number of properties going under contract and the number of new listings. Just like last year, this time in Riverside, it was a crazy time. This year continues in Riverside to be a crazy seller's market and tough for buyers. San Bernardino, we've got the closest we've seen for number of new listings and number of properties under contract. So a tough seller's market. Look at their dramatic drop off in inventory from 2018. That's why it's helpful to look year over year at these numbers. Because of COVID, there's some anomalies in the data. So it is helpful to look at 2021. But again, those are COVID years. 2020, COVID had not hit yet in February. It wasn't until March and beyond when COVID hit. So theoretically, 2020 are regular numbers. And we know 2019, 2018 are more regular numbers. But you can see that big drop in inventory. And then moving into Ventura, again, we've got a market where record low inventory hitting the market. We still have a solid number of pending sales. It's not as close as it was for 2021 between the number of properties under contract and the number of new listings. So it's not quite as crazy of a seller's market in Ventura right now, but it's still a very solid market. In San Diego, you can see the big drop, record low inventory, and you can see that the number of pending sales has flipped with new listings. So this is the most extreme seller's market that we're seeing in Southern California right now in San Diego. And look at the drop in the number of closings. This is also attributed to lack of inventory. It's reducing the number of sales because there isn't enough inventory to sell. So don't be misguided. You may hear in the news, oh, sales have dropped. It doesn't necessarily mean a shift in the market that will lead to price reductions. What it is a lack of inventory leading to fewer sales. Those are very different things. With that last example, with less inventory leading to fewer sales, it actually is an increasing price environment. If we're seeing the number of pending sales and sales drop, and we still have a solid number of new listings, that would be a decreasing price market. And that's not what we're seeing. Here's the only place you're going to get multifamily market updates for Southern California every 2 weeks. Let's dive into Orange County. Our number of new listings and our number of pending sales are the exact same number. What does that mean? You've been watching this, and that means that it is a crazy seller's market for multifamily. And I can attest to this right now. There's not enough inventory. My listings for multifamily coming to the market, we're getting multiple offers and they're going. Now, of course, you still have to be priced right. There may still be price reductions if you start out wrong, but sellers are going to shoot for the moon, the stars, and the sun when they see what other buildings are trading for and when they see numbers like this. So crazy seller's market for Orange County multifamily. Los Angeles multifamily, we do see they're still under the eviction moratorium. We see that listings are lower, not dramatically lower, so there doesn't seem to be such a crazy effect from the LA eviction moratorium for multifamily. It may only be one unit that's not performing for multifamily. If you have 4, 5, 10 units, that's only a tiny part of your income. if you are the owner of a condo or house and you have one unit not paying rent, that means it's 100% vacancy factor. So we can see that under contract, we're actually at a record high for the beginning here of February. So it's a very solid market for Los Angeles multifamily, even though they're under the eviction moratorium. I've been recommending to investors who own in Los Angeles to essentially get out of Los Angeles if it makes sense for them. Get their money through a 1031 exchange into Orange County, some of the other surrounding counties that do not have an eviction moratorium running through 2022 into 2023. In fact, the buyer of one of my listings right now is a Los Angeles multifamily owner. Riverside is a solid, more affordable market for investors. Last year was crazy for multifamily in Riverside, and here it's slowed up a bit. Listings are pretty solid, but the number of properties going under contract has dropped in half year over year. It's not out of line with a traditional year, so this is a more traditional year for multifamily sales in Riverside. I would have expected actually to see a higher number of properties going under contract because Riverside, again, is a more affordable investor market, tends to be better returns for investors. San Bernardino is moving along, another more affordable marketplace for investors. They tend to get better return. And it looks like a pretty traditional market, although we do see pending sales are up other than last year when they were higher, and listings are steady. So if you're well priced in San Bernardino, you're going to get multiple offers. And Ventura is busy. We see 5 properties have gone under contract. Haven't seen that since 2018. Inventory is low. Not much trades, as we like to pick on Ventura a little bit. You know, we love you, Ventura. Not much trades for multifamily. But right now, it's looking like a pretty extreme seller's market. If you're one of the few to sell in Ventura, you should get multiple offers. And San Diego is a hot market for single family and multifamily. What's going on down there in San Diego? Something in the water? You can see that we have the twist where the strong demand and the drop in the number of listings has led to an extreme seller's market. So San Diego for single family and multifamily. San Diego for single family and multifamily, this is the time to sell if it makes sense for you. This month we pulled the foreclosure data out, and that's because there's finally something statistically significant to report. So make sure you tune in on Friday when we run through our Southern California foreclosure report. We promised to dive into headwinds to supply and demand, so we're going to run through a quick list, a few things that we're tracking. So headwinds to supply include the fact that it's tough for sellers to sell because they don't have anywhere to go. So the inventory crunch is obviously affecting those who'd like to sell and move into another. They can't move into another. So that's leading to very tight supply numbers. The further we get down this hole, the less inventory we have. Another interesting headwind to supply will be low interest rates. So as interest rates go up, we're going to see that sellers may reconsider in selling if they see that they have to go from a 3% or 2.75 fixed rate loan to something like a 5 or maybe 5.5% interest rate. That will be tough for some folks to swallow. So we do see that as further constraining supply. As for headwinds to demand, there's quite a few of them. So obviously we have interest rate volatility, and that's coming from the recent report on inflation and the fact that the feds are going to have to step in and raise the short-term Fed funds rate. So this is leading to volatility in the market right now, and it's going to lead to interest rate increases beyond what we've already seen so far. So what this is doing, the reason this is a big deal is obviously this is pricing some folks out of the market. When we have prices as high as they are, interest rates are now decreasing affordability. And that's another headwind in general that we've had, and that is affordability. Also, the possibility of a war with Ukraine and all the uncertainty that brings is leading to headwinds to buyers. Some buyers are saying, well, I don't know what's going to go on in the world stage. I don't know how that's going to affect the economy. Another big one is buyer sentiment is at record lows. So the survey by Fannie Mae shows that we are at absolute record lows. Buyers do not think it's a good time to buy, and that's because of high prices and the worry from some people and some buyers I'm talking with that they're buying at the peak of the market. Now, of course, if your long-term strategy is hold and hold as long as you can, if you can hold 7 to 10 years, that becomes less relevant. But I do understand the concern. Some folks may have their worry that they're buying at the peak. These are some of the headwinds we have for supply and demand. We're going to continue to track these things. We'd love to see in the comments below where you think things are headed. Do you see these as headwinds, or are we going to continue to just go up, up, and up in values? Let us know in the comments below. Make sure you subscribe to our free weekly email newsletter so you can get all the charts from this report, and you'll be receiving the charts from the Southern California foreclosure report when we release that video on Friday. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.